Hey all, welcome to ShareTreck, where science meets investing. Today we are diving into Illumina's Q1 2025 earnings and unpacking the real story behind the numbers. I'm your host Raj, and value your time, I'll keep this brief and simple and concise. With that said, let's get started. First off, revenue is flat, China is shrinking, and tariffs are taking a bite. But Illumina is quietly making moves in spatial transcriptomics, AI-driven sequencing, and new partnerships that may set it up for a comeback. That, in brief, what the Q1 earnings is all about. Let's break it down. Illumina reported $1.041 billion in core revenue, down just 1% year over year. That's flat when adjusted for currency. But here's the twist. GAAP EPS came in at 0.82 and non-GAAP at 0.97, a beat compared to analyst estimate, which is good in my books. Margins held up too. GAAP operating margin was at 15.8%, whereas non-GAAP operating margin was 20.4%. And get this, cash flow from operations was $240 million and free cash flow hit $208 million. But the outlook seems to be a bit cloudy. Here's where things get a bit tricky. Illumina has slashed its 2025 guidance. Now it expects revenue to decline 1 to 3% year over year. Previously, they forecast low single-digit growth. And you may ask why. Well, China's revenue is collapsing, $72 million this quarter, and projected to be just $165 to $185 million for the full year. Tariffs will cost the company $85 million in 2025, cutting EPS by 0.25 and margin by 125 basis points. And in order to offset that, Illumina has launched a $100 million cost-cutting plan. Now, here is the upside. And this is where long-term investors should pay attention, in my humble opinion. Illumina announced a whole lot of things. A first-of-its-kind spatial transcriptomics platform with Broad Institute as an early collaborator. And guys, you know the pedigree of Broad Institute. They are the ones who came up with CRISPR, and then they came up with base editing, and then they came up with prime editing. So they are at the cutting edge, as always. And partnering with them, Illumina being in the cutting edge of genomic sequencing, this combination seems to be a winning combination and could add value to the company. And they also announced a new partnership with Tempus to drive clinical sequencing adoption. And that, again, in my books, is building a strong foundation for the future. Sequencing of 250,000 whole genomes for Alliance for genomic discovery is another aspect. And continued development across CRISPR, single-cell, and epigenetics application is also in progress. All of this signals that while near-term sales are choppy, Illumina is investing in platform differentiation, the kind that could matter 3 to 5 years out. Now let's talk about strategy and resilience. Illumina ended the quarter with $1.24 billion in cash and repurchased $200 million in shares, a strong show of confidence. That new CEO, Jacob Thaysen, in my opinion, is doing a great job. He's tightening spending but not backing off innovation. He's already demonstrated his capability by creating a clean slate when he took over as CEO, put the grail issues behind in the back burner, it's all gone. And now he's focusing on the real problems in front of the company. This, in my books, is really good leadership. And Illumina continues to highlight that revenue outside China is growing 0 to 2% in constant currency, meaning the core business is stabilizing. Then you may ask, Raj, what's the investor takeaway? Give it to me. Well, Illumina is in growth mode right now, but it's not in standstill mode either. The company is absorbing major economic headwinds and macro headwinds while doubling down on strategic R&D. It may not be flashy, but if the platform bets pay off, Illumina could come out of this decade stronger than it entered. And that, my friends, kind of summarizes my opinion of the Q1 earnings from Illumina. I'd like to thank you for watching ShareTreck, and also those of you who are members, I'd like to thank you for supporting me in this venture, and all our subscribers, thanks a lot. If you want to get more earnings breakdowns and long-term genomics analysis, subscribe now and press the notify button, because I'll be covering Beam Therapeutics next, which will be a deep dive, and any other genomic company in our watch list that comes up with an earning. And if you have a particular genomic company that's not in our watch list but that you're interested in, you can always let me know and I'll cover the earnings for you. I also live stream every trading day at 7:45 a.m. Eastern Time and hope you could join me there for pre-market analysis. Right now I'm covering AI and technology stocks, but if you have any genomic stocks that you want me to look at for day trading or swing trading analysis purpose, you can always give me the ticker symbol in the live stream and I'll take care of it for you. Until then, stay curious and stay invested. Hope to see you in the live stream as well. Bye for now.